Welcome aboard for the very last week of 2021 for Trading Buddies. So glad to be with us. I was about to say me, but it's us. It's all of us. We're trading buddies, aren't we? Indeed we are. Look, let's dive straight in, and get into the pound. And my big question to myself about the pound is it too obvious to go short the pound right now? Isn't it funny? We wait for setups. Well, I haven't got one, mind you. And then when they occur, you ask yourself, is it too obvious? It may well be if I get a retest of this trade line that's been broken and rebroken after some consolidation over Friday and so far today. Sadly, that consolidation, g'day Lewis, g'day Paul P. Sadly, that consolidation is not strong enough, or I don't believe it's strong enough in terms of its sideways action to actually trade it. I think there's 90 pips of risk involved. Yep. And nearest support is only 15 pips away, or if you an extension, 20 pips away. Not so great. On the high side of things, let's go a bit wider on that. On the long side of things, you're looking at it's not that bad. You're getting up towards the 1-to-1 mark. I think I'd be okay with that, but I'm not okay with the downside. And it's the downside that I see as the most obvious course of least resistance, or in this case, least support. I want to ask Ash when he comes into the room, because I've got conflicting technical views here. One is, and I'll point to, in fact, I've got probably 3 or 4. There's one telling me it's a false break thus far of support. And if this candle were to close pretty much as it is, it'd be very tempting for me to trade it long. That's the 4-hour chart. Hourly chart is giving me completely the reverse of that, suggesting that we've got a false break to the upside. And if this candle were to close, as I said, on or about the pivots and the backside of that trade line, gee, it'd be very, very difficult for me not to go short. And fundamentally, I think we've got a big issue in, not that I'm a fundamental trader, but you've got to take these things into consideration when they appear to be so dramatic, emphatic, important, as it appears the situation in the UK is, in particular with COVID, but there's far more to the story. So I want to hear what Ash has got to say about that before I would launch into a short pound US dollar, because technically, I don't know. I didn't hear what Alexis had to say yesterday, but a lot of momentum to the downside, isn't there? That's the daily chart. That's the weekly chart coming off a big double top. We've had low, 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 high, low, 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 and then a big drop in the last 3 or 4 weeks. Monthly chart is really no better, and suggesting that there is more downside. Although that said, there is a support area that we're pretty much on, I think. Yeah. Well, that's the level that's kind of under attack at the moment, isn't it? As I said, is it too obvious to go short the pound? I don't know. I want to ask Ash. Maybe it's not that obvious. Maybe there's that false break of support looks far more enticing than the false break of resistance. It's interesting, though, I've got to say. It's in a great position from a launch point of view. I'll put it that way. See the double bottom, higher low, higher high, higher low. Tough one. Maybe maybe thinking maybe this is a good breakout trade, but not there. I can't trade short there. Perplexing. And I think that's very much a common theme from a technical point of view. There's the hourly candle, and it didn't quite come back to that area. So that makes it easy for me. I don't have to trade it because the setup's not there. But from, pardon me, a 4-hour point of view, it could still be. And if I have a look at a little bit wider on the hourly, so take that line away, looks a whole lot different. Yeah, I've still got to be a bear at the moment, I think, although, it's conflicting. It really is conflicting. Okay, let's see what Ash says when he comes into the room from a fundamental point of view. Wow, what a week. What a week ahead. We've got a Super Thursday coming up where I think there are 3, maybe even 4 central banks. We've got the Fed, the BOE, the ECB, and I think there's one other. I could be wrong. Let me find Forex Factory. You want the pound to go up? Why? Why? Because you're short the FTSE, maybe. Yeah, thought so. Fair enough. I don't know what the FTSE's doing. I'll find out in a minute when Ash comes in, of course. So we've got the Fed. We've got the Swiss National Bank, the ECB, and the Bank of England, all on the one day. OMG. Anything could happen this week. Anything could happen. So how would I like to attack? Well, I'd like to be in the market. I haven't got a trade in the market at the moment. Not a single trade. And I'm pretty sure that I'm not going to find one today, although that one there is nearly there. Had it gone back to the pivots, I think I'll probably be tempted into that. But I'm going to leave it alone for now. Where was that line? Through there, yeah. So it didn't quite get to the line. It's all but it didn't get to the pivots either. So either one of those would have been good. You know what I am interested in still is Swissy Yen, because it's just playing the game for me. It's doing everything you ask of a currency pair that's ranging, except setting up when I'm in front of the charts. There was one there, I think, as we pointed out on Thursday. That went Friday. There was one. That was the one. That one there that I mentioned, double cross, and a perfect candle to trade. Look, phew. Did we get a lower high? No, untradeable there on the 4-hour chart. On the hourly, yeah, would have been tough to get in there for mine. But going back the other way, no problem. There's another one there. There's another one there. They're all over the shop, man. The gap down this morning was closed very quickly. So I'm still interested in that, but I want to see it hit the top or the bottom first. And the way things are going, that's likely to be the top first. We did have some game-changer bars that I'll point out. Let's go back to that for the weeklies. But again, I'm not sure I'm interested in them. Aussie CAD was one. Yeah, pound Kiwi. I like. I want to have another good look at pound Kiwi. I agree with you, Lewis. It does look interesting. But this one here, the Aussie appears under pressure, under strong pressure, and I'm not really sure why, apart from the fact that they won't move interest rates. Well, there's a reason in itself. But what we have is a strong, I won't call it a bullish engulfing bar, but it's certainly a game-changer bar. There's no question about that. And is it too early to trade it? Look, I think the answer to that is probably yes. But on the 4-hour chart, It does look interesting. Sorry, not the 4-hour chart. The daily chart. Why does it look interesting? Because it's given me a slingshot setup, which I call the dominator. It's not perfect, I'd have to say, from that. If I took it from there, it would be, but then that's not my high. That's my high. A retest there would be interesting, but that's a tradable bar under good circumstances. The good circumstances, of course, are out of a retracement. This isn't, well, can you call that a retracement? I don't think so. It's a trend. This, I mean. This, I don't mean that. So, no, I can't call that a retracement. It's a potential reversal, but it's not there yet. So I'm going to have to wait on that. Sadly, but that is one of the game changer bars. It's very tough for me to trade game changer bars when they're right at the bottom of a big momentum swing. And this has to give me something else, has to give me a higher low. But the Aussie is under extreme pressure on the charts. There's no question about that. And Friday, sorry, yeah, I suppose it was Friday. Bit of a combo, really. But the weekly bars are somewhat reversible or reversing in their nature, but too early. You just can't trade one bar. It's got to be more than that. So again, I'll be waiting on a higher low. Bit of a double bottom form there. Oh no, this is this stupid thing. And I haven't got the WhatsApp up. It's up here somewhere. Smiley face. I'll get rid of it. There's no tail on that, to the best of my knowledge. That is that ridiculous line that I hate. So yes, same again. I need to see a higher low in here, or a false break of support, or a break of resistance. Haven't got that. Have got a big bar though. So I'd be willing to say we've got a double bottom. If we get a higher low here, I'd be willing to trade it. The third of the Aussie, Aussie Kiwi. Cable long, really? Can't talk myself into that. And I'm glad Ash has joined, because I really want to know what the F&L's going on over there. Because it seems to be that it's too obvious to go short the pound right now, Ash. Is that the case? Am I overreading?
No, I don't think you are, mate. No, I don't think you are. I think.
Where's your mic, mate? You're a bit soft.
Okay, let me just do this. It might be the internet connection. Let's try. How?
Maybe it's me.
Maybe I need to turn my thing up. Is that any better?
And I'll just turn my volume.
Could be you.
Up. There you go. I'll turn the volume up. All good.
Is it too simple? No, I don't think it is, mate. I think the pound is definitely justifiably weak at this moment in time. It's a strange one, isn't it? Because the way that the rest of the world seems to be reporting on Omicron is, well, Europe aside, the rest of the world seems to be coping relatively well. We don't seem to have a spike in cases in the States that are potentially going to hamper their economy.
Not yet.
Not yet, but the UK is really starting to get a huge problem over here, and then there's reports about AstraZeneca having zero protection with Omicron, and I think quite a large amount of the population have been AstraZeneca because it was the first one. So I think inevitably the Omicron effect will probably weaken the pound. I think a bigger question is the price attractive, and it's not. I mean, it's just this isn't where I'd want to go short. So in that regard, I know what you mean. It's just it's one of those things that the technicals and the well, I don't even know if you could call them the fundamentals, because the fundamentals are still quite clouded yes, there's weakness potentially going to seep through into the UK economy, and that will probably put Bailey and the Bank of England governors on the back foot. And I guess then the other thing to consider is, did we have a hike or some kind of aggressive tapering like we have in the States priced into the pound? Because if we did, then this becomes value to sell. But if that hasn't already been priced in, then it's not really a place that you want to go short anyway. And I don't think we have had it priced in. So I think the pound still needs to rally before weakening. Regardless of anything else. So, what is that? That's a different time frame there, right?
That was an hourly, because I've got conflicting evidence here. One's telling me go long, one's telling me go short.
Yeah.
So, and I think that's typical across a lot of currency pairs at the moment, and it's making it very, very tough.
Yeah. Yeah, I agree with you, and I think that this is a strange period as well because of the end of the year. The Santa rally we talked about in stocks has started. I mean, I don't know whether it's going to end relatively soon, but we've got the Fed out in a couple of days. I mean, that's going to...
Well, it's not only the Fed. There's 4 central banks reporting in the one day. My God.
Right.
It's Super Thursday, man. Super
Thursday, right. Okay, so Super Banking Thursday could jerk things around a little bit. I guess most of the eyes will be on the Fed.
Yes.
And what they'll do. And again, it is what the Fed's about to announce priced in. What we saw on Friday with the stock market was a complete lack of reaction from the fact that the United States reported inflation numbers at 6.8%. I mean, that is just astonishing, really, when stocks rally into
absolutely.
A number like that. And
it has to force their hand, though, doesn't it? I mean, they can't ignore that.
This is the thing. I mean, we're looking at it and going, the stock market, is unlikely to be able to survive here because the Fed are going to need to do something. However, the numbers came out and the stock market were like, well, that's fine. We were expecting that. So it didn't really move. In fact, it moved to the upside. So is that what happens on Wednesdays? Oh, sorry, Thursday. The Fed come out and say what the market expects them to say, and the dollar weakens. Could be, and I suppose that's the thing. We may well have a fundamental view on what should drive the price, but whether we've got the right price is the bigger question, I think, and whether the price whether the announcement to be made is already priced in is the other big question. So for that, the pound is cheap. In fact, cheap's the wrong word. Is at a level of support and is probably in a buy zone rather than a sell zone. And there may well be negative seeming news, but actually it ends up giving the pound a bit of a rally because the move's already happened on the bigger move, on the longer term timeframes.
Well, I can buy into that. Absolutely.
Yeah,
and that's what I say. The bigger picture is telling me long.
Well, COT data's long. Seasonality's long on the pound. And interestingly, seasonality and COT data are both short the dollar.
Wow. Confusing, isn't it?
Yeah, well, it is because the risks to the dollar, I suppose, are understandably to the downside. We have had a big run to the upside, a pretty big run on the US dollar to the upside, and therefore it makes sense that the risks are more to the downside than they are to the upside.
I don't need to be have my arm twisted to go along with that, but everything we spoke about on Thursday is pointing in the opposite direction. In terms of, I believe. Well, you believe that the stock market's going to come off.
I do.
I believe gold is in a really, really, really bearish long-term chart. I mean, that chart of gold to me on the monthly, if you go wide enough, is really, really bearish. It doesn't look to be too much in it there, but and it doesn't look to be too much in it there. It could go either way. But when I go out a little bit wider, all I can see is this big double top.
Yeah.
And if I go a little bit wider still, I can see massive downside. Whether that happens, whether it can happen, I have no idea. Maybe it makes a triple top before it goes down. I don't know.
Well, yeah,
but,
I mean, do you know what? It's interesting because, again, the seasonal points are gold upside, but the COT data doesn't. And that suggests that we do go sideways or maybe have a little bit of upside from here. It's just quite unloved, isn't it? Gold. I mean, I think you can ding quite a lot from the bond market right now, and the flattening yield curve. There's and just so everybody understands, a flattening yield curve is when the near-term yield starts to squeeze closer to the long-term yield, and what that tells you is that investors believe that the Fed will probably raise rates early doors, but then probably have to fix it and come back down again because the 10-year yield isn't going up. So they don't believe that you're going to get the same return in 10 years, on the longer term picture, but they do believe that the 2-year. So that is a bit of a warning sign. And this is the thing, we're sort of like looking around for indications, and the bond market seems pretty good. The stock market just hasn't got any kind of warning signs going on at all, except for the fact that if you look at the stock market today and you look at the stock market for the year and you look at the stock market over the last quarter, the rally makes sense because of what we've had with earnings. Those earnings have maybe arguably, but I think most people can agree those earnings have probably been fueled by cheap money and huge liquidity. So does that mean that if liquidity is starting to be choked, which it has already started, and if there is an increase in that choking of liquidity, then the next earnings season will be nowhere near as good as this one? Probably it does. Now, does that revalue stocks? Does that make you sort of like start going, well, the price that I bought it at was because of these earnings. Now, the price to earnings ratios that we're going to see in the new year, in the next earnings season, won't be anywhere near as generous. So does that mean that I should be putting my money into looking for other assets? And it probably does. But then you're going to go, well, where am I going to go?
Yeah, where?
Yeah, where am I going to go? I mean, there are people out there that know where to go, mate, and it's certainly beyond our pay grade. But it's it would make sense to me that the stock market becomes overvalued. But overvalued is a relative term, because you're kind of going, well, against what?
But interestingly, and I've been reading just a little bit, and I don't generally go too much below the headlines, but what is being indicated to me through those articles is that it's not so much now, and certainly in the last 10 years, this hasn't been the case, but now it appears that a very small percentage of the stocks are holding the market where it is.
Yeah.
In other words, there's a lot of correction already taken place in the lower value stocks.
Yes. Yeah. Very true. Yeah, very, very true. And I suppose, I guess it's do the big guns play catch up, or does it flip the other way? Do the smaller ones kind of, eventually sort of bottom out and then they start picking up and everything's dandy again?
Well, it appears that they've achieved or are in the process of achieving fair value, whereas the likes of the big, whoever, how many they count in the smallest cap, the smallest big cap, 10, 30 I know.
Well, I mean, the Nasdaq's full of 100 stocks, so you'd say like 10% of that is the thing that drives the
S&P 5.
The S&P.
There's a 30 one, isn't there? Is it top 30 or whatever they call it?
Dow Jones, yeah, is 30.
Is that 30?
Yeah.
Right. So how many of those are extremely overvalued versus let's say the top half extremely overvalued. And is there anything in the Dow that is fair value? And if that's not the case,
yeah,
then wouldn't the Dow be a better conveyance than the S&P?
I mean, that's a really good question.
By my logic.
Do you know what? It all depends. It all depends on the rotation, because the Dow.
I'm talking about shorting it. I'm not talking about buying it.
Right. Oh, okay. Well, again, I mean, it would still come down to rotation, because the Dow contains different types of stocks than the Nasdaq, as an example. And because the Nasdaq is tech, and it's so much to do with growth, and the Dow is I guess less so than the Russell, but the Dow might be, it's more kind of energy and stuff like that. So it's more staples and those types of stocks. So you would have a different approach depending on the conditions towards the Dow as you would the Nasdaq, and there will be different problems that might belie the different indexes, because this is the thing. This is one of the reasons I've gone short Nasdaq, and actually the FTSE is absolutely getting obliterated this morning because of Omicron, but Omicron's a difficult one, because it's a bit of a surprise. It's kind of come out of nowhere to a degree. It's not like a fundamental driver that changes numbers to do with the economy necessarily. In fact, that sounds a bit silly, because of course it is. But I suppose my point is, it's not a central bank and a government kind of driving the price. And because the Nasdaq, I think, is so closely aligned with what's going to happen with the central bank, then the Nasdaq looks like an interesting one to short if money starts to be squeezed. Now, whether you'd say the same about the Dow, I'm not too sure, and because I don't know the Dow that well. If I'm completely honest, I know the Dow is the Dow Industrials traditionally was transportation, but it's really not that anymore. I mean, there's stocks in the Dow that have got nothing to do with transportation. But I do think that the Dow is probably more to do with staples, if you like, whereas the Nasdaq's to do with growth. And if there is a choking of liquidity, then you'd expect the Nasdaq to be the one that would suffer more than most. I could see the Nasdaq. Is that the Nasdaq there? That's the S&P, isn't it?
That's the S&P, yeah.
Yeah, I mean, and there's stocks that are in the S&P that are in the Nasdaq, and there are stocks from the Dow that are in the Nasdaq. So the S&P is like a smoother, if you like. But the S&P is the same. The S&P to me looks to be at a level of interest. And this is all we're ever trying to do. I mean, I know everybody approaches the market differently, but I really want to know is there a potential driver in a specific direction? And I would say there is. I think that the potential driver down is the Fed and the lack of cash. And the reason that I would say that is because what we've seen after the coronavirus initially happened was a surge to the upside with stocks. And that surge has been fueled by easy, free going money. Now, if that's going to change, then it would make sense for a little bit of a reversal, if not a major reversal. And then I look at the chart and I say, well, this has been resistance, and for pretty, quite decent resistance as well, once before. So you could argue twice before. So I am at a level that I would consider a sell zone. And I have a potential reason for it to sell it as well, depending on what happens Thursday.
Yep.
So I'm quite happy to say a short here.
Look, I wish I could say it's obvious to me what happens next in any one of these charts. But seriously, I am absolutely at a loss to find a clear direction in any one chart. I agree with you. This is at resistance. And seriously, that's a good thing, because we will find out one way or the other what's going to happen. So if it turns out that we get a signal that's going short, fair enough. But if it takes off, it's going to go again and put in new highs again.
Yeah.
And I just don't know how many times that can happen. Yes, it's got a little bit of form as resistance, and to be honest, it's a while since we've seen 1, 2, 3, 4 weeks in a row where we haven't been able to break resistance.
Yeah.
I can't see one.
Yeah. Yeah.
Right, and I'm going back to a couple of years there. So that part I get. And I'd be willing to even trade this if it's set up for a lower high, because I agree with what you're saying. But what I can also see is a decent retracement back here, and then it goes again. And that's probably what I need to see. So down to here, back up here, before it makes sense to me to go short. That's on a weekly chart.
Totally with you, mate.
So, yeah, so that makes sense.
Which is what I'm looking at, actually, because then you create a head and shoulders, and that's what I'm looking at. Right. I'm looking at that not the most recent low, but the low before it. I'm looking at that as a potential neckline, and where we are now as a potential head. Now, whether that forms is difficult to know. Paul's asking, is the Santa rally referring to the dollar, just the dollar? No, it's not. It refers to stocks really across the board. Even the FTSE has a Santa rally. And the Santa rally is an interesting one because, you could put down, because it's a seasonal bias, isn't it? It's a seasonal indicator. And you could put down seasonal reasons for anything happening. And the seasonal reason, or a seasonal reason, that the Santa rally happens is that funds like to kind of balance up. This is the time that any funds that haven't done particularly well will be sort of getting into the market, because they need to massage their accounts to make sure that they're not going back to their investors and going, "We lost money this year." I mean, if imagine you're in a fund and they're going back this year and saying they lost money, the investors are going to be leaving. So the Santa rally can happen because of that. I mean, there's other reasons, of course, but it can happen because of that. But the thing about the Santa rally puts me on alert for next year. Now, I've said February for quite some time, but I think it could be earlier than that. But it does put me on alert for next year. I'm not sure about this year. We might get a bit of sideways consolidation. We might get a movement after the Fed. I just don't know. But what may happen is the market may sweep aside anything that the Fed says and any policy that they're talking about for the rest of the year. It hits January the 1st, and then we get a reaction, because that's when books get balanced. Difficult. I think I heard Gordon say on Sunday that there was some pension companies that needed to take some profits, on the stocks, and maybe that might be a driver. I just don't know, but I certainly think that that there will.
Sorry, there were some pension funds that what?
I mean, I didn't catch the full thing, but I think what he was saying was that it's the time of year that they need to take money to pay the some of the pensions. They need to, so that might be a driver for the market. Now the Santa rally lasts until Christmas. It doesn't last until the new year. So we literally are, 2 weeks away from a potential turnaround, possibly. We just don't know. But it does mean that the next 2 weeks are either going to be very, very difficult, because they're going to bob left, right, up, down, or they're going to rally. It's the move to the downside, I think, would surprise everyone. That doesn't mean I don't think it's coming, because I do. I think there is a move coming. But I don't know. I'd be a little bit skeptical that it's yet, but it doesn't mean that I don't like the price, because I do like the price. And what I'm hoping for is some sideways consolidation for a couple of weeks. Then we start to loosen off, and we start to come down. And moving into January, February time, we start to really come down. And it might take a couple of months to make that head and shoulders. That's a weekly, isn't it? So we're potentially looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, possibly 21 weeks, before you make the complete picture. But it took 6 weeks to make the head. From the lowest point of that left shoulder up to the top of the head, 6 weeks. So it might take another 6 weeks to come all the way back down again. Now that leads us into around about February. So you know, that's kind of what I'm looking for, mate. I think if you're in this and you like the short, it's well worth being patient, in my opinion, as long as you're not paying too much in swaps. But if you're trading the futures, you shouldn't be. You know, you just be trading the crossover. When it crosses over again, you'll have to play another spread, but that'd be it into the next quarter. But I do like the short, mate. I do like the short. I think it's coming. And you know, the other thing is that if it pops to the upside, even then, I would still like the short, but it might not be until February. But we're probably going to need to wait for a new picture to form at that time, because when you look at this chart, it's just a series of breakouts and retests. And even the last couple
taken about 6, which have all taken. I was just counting. And most of them have taken 6 or 7 weeks.
Yeah,
which is interesting.
Yeah, and the expectation here will be that we go again, and this point becomes support. It's not support right now, though. I suppose that's the thing, isn't it? And while it's not support right now, we either look for the downside or we wait for the picture to unfold. I certainly wouldn't be buying it here.
Yeah. Look, if this had poked through here, it would have been a classic exhaustion bar.
Yeah.
I'm just not sure that it still is. But it's interesting because it's the biggest buying bar on the chart.
Yeah.
Going back to here.
Yeah.
Which is, 14 months ago.
Yeah.
So that's somewhat interesting.
Yes, it is. Yes, it is. Yeah. Yeah, significant. I mean, if you look at the monthly bar, December's bar, November's bar. November's bar is pretty, that's pretty weak there. And it hasn't really done anything. We had a little bit of a test of the downside, and maybe that's all that was indicating. But it hasn't really done anything. This month is going to be quite interesting. Do we end up at the lows of the bar, which we could after a Santa rally? Still could happen the last week of the year. Or does it actually take out the highs of that bar, and everybody kind of gets caught in another round to the upside? But what's the price of the high just before Corona?
The high just before Corona.
Yeah.
March or February 2020.
The one before that. The bearish, but that one. What's the high? Yeah. What's the high of
that? It looks very much like 3397, so 3400.
3400. Okay. All right. Well, that's not doubled then.
No,
it's not doubled in price. Okay, we're still a ways off that. Yeah,
it's about 50%. But I mean, there's just been no let up since then, right?
No.
The double bottom.
But this is the thing.
Where's the high and low?
Do you know what? I mean, this is one of those things that you'd kind of want Gordon to analyze for you. But how many times has there been this kind of move in the stock market followed by a year where it's done either the same thing or retraced significantly? Because this also, if you think about what you just said about the blow off top, have we had a blow off year in a way? Because every time frame you can create a bar. Now this bar is going to look incredibly bullish, but you'd expect some retracement after a bullish year like that.
Well, I would. Totally. I mean, 2 bar, 1 bar, 1 bar, 1 bar. It's interesting.
Yeah.
Retracements I'm talking about.
Yeah.
I don't know. Yeah. If it gets through here, then okay, the Santa rally is valid. But if it doesn't, I'm kind of thinking, do they really need more money, these funds?
Well, do you know what? The other thing is the debt ceiling. I mean, that's something else. I mean, there's quite a few headwinds really in the States right now because you've got the debt ceiling that they're talking about raising again. And I think some of the argument about that is not whether they can raise the debt ceiling, but what stipulations does it come with? Raising the debt ceiling, because they'll continue to do this. They'll continue to raise the debt ceiling and kick the can down the road and push the problem away. You got the Fed also as a potential headwind. Omicron doesn't seem to be affecting the United States as yet, but we know what these stories do, and they literally can come out of nowhere. But it's becoming very difficult to call downside. I'd certainly appreciate that, but it will come at some point. It will come at some point, and I don't know what the driver is, but it does seem like there's enough there right now to say that we could have some drivers.
Yep, I might even turn into an S&P trader if I can see a lower high.
Yeah.
I might even do that. Couple of things. Join the crew. Couple of things I'm looking at. And Lewis wanted to have a look at pound Kiwi. Now, pound Kiwi does look interesting. But I want to start with the monthly chart. The monthly chart, which is what I was trading for the longest time, had this going on. Which is how we got into the trade in the first place. And I was looking for price to get up here. That failed. And now we seem to have a little bit of a double bottom going on. But a double bottom of what is my question? I haven't really got, or maybe I do have. Yeah, maybe I do. Maybe I've got a different market structure and I just need to get rid of that. And that market structure could be right about there. Which means that we're back at the top of that range, if you like. So I can kind of see that. But like most things at the moment, I can't really buy into it too much, because then I see on this chart the potential for a big inverted head and shoulders. Inverted from what? So it's just not clear. It's so not clear to me. And when that's the case, I've just got to defer to nothing and say, well, okay, it's not there, it's not there. So I can see a big bearish engulfing bar here. So, and a game changer bar. This is on the daily chart going back to last Tuesday. Then I can see a retest of that breakout at the weekly pivot. So that's telling me short. But then I can say, oh, maybe we need to form another shoulder up here. It's just so cloudy. I can't make a clear decision.
There's a horizontal level on that, mate, around about 188.60
on pound Kiwi.
Yeah,
188.60 down here somewhere. Yep.
Yeah, there's one there. I mean, if you look on the monthly, it's really clear.
Yeah, strong support, and it's hit it.
Yeah.
It's almost hit it again. It did hit it again.
It did hit it again.
Bounced off that again.
Yeah.
So yeah, and that's what I'm seeing. All sorts of things that are suggesting to me that we do have ranges.
Yeah.
But most of them are mid-range at the moment, and very, very tough to trade.
I mean, I think the other horizontal level is probably at 190. 800 as well. I mean, you've probably got that actually. Yeah, it's pretty close to where you're at there. So we're closer to that point. And this is the thing. I mean, what's this? November 2017. So for the last 4 years, we've really been stuck in this zone, haven't we? And
going nowhere.
I mean, it doesn't look to me like anything's going on with this. When we're talking about the short on the pound, because of Omicron, then it would suggest to me that the dollar's not an attractive short, but something else maybe. I don't know whether this is the price to get it in at for the Kiwi, but it looks a lot better to trade it against the Kiwi than it does against the dollar.
Interesting. You mean long?
No, I mean shorts.
Why the Kiwi? If the dollar's due to rally, oh, you don't believe it is, right?
The dollar, no, not that. I'm just saying that the pound isn't an attractive zone to sell against the dollar right now because it's quite low already. But against the Kiwi, it's edging closer to a sell zone.
Yep. Okay.
So I'll be more interested in that probably. You know, I don't know whether it's, you know, I probably prefer it against the yen, to be honest. But you know, because this is in a range. That's the way I see it. Aside a few breakouts, a couple of breakouts, it's ranging. And we are midway, as you said, in that range, which doesn't make it an attractive zone to try and trade it at all.
I don't have a problem with ranges, as you know.
Yeah.
But they've got to be at the top or the bottom before they're interesting.
Yes.
And that's simply not the case.
No.
Pound yen, you reckon?
Well, the pound yen would be a more attractive one to me. Yeah.
Hi, Helen.
Hey, Helen.
How you doing?
Yeah, good to have you back again, Helen.
Yeah, that's more interesting. But I'm not seeing a sell there.
You're not?
Not right now.
No, it's difficult, isn't it?
But I mean, you know, that's a whole bunch of mess right there.
You know what the other thing is in the UK, mate, that's unfolding right now is that Boris Johnson's approval ratings are suffering significantly, and
they're trying to kick him out, aren't they?
They're trying to kick him out, and that would definitely weaken the pound.
Yeah, it's tough to make in my books anyway. It's tough to make a case for the pound long.
Yeah,
and how is that thing going? It's just so tough. It's messing with my head.
Yeah, which is really sort of where we just sort of say, okay, well, there's no level that we can trade. If there's no level we can trade, then I can see why that's messing with your head, mate. Because it actually looks like there is a level to potentially trade here, isn't there?
Totally.
But you probably want, what's that? Is that a daily bar? Is it?
That's 4 hours.
That's 4 hours.
But you know, again, it's giving me a false break of the support line and now retesting that, which suggests it's a good buy zone, good buy area. But then if it closes below here and we get a little buying bar here, it's telling me the opposite direction.
Yeah.
So it's wow. What about gold? Damn it, Ashley, I keep getting bumped off by ATW. What does that mean?
I don't know.
Bumped off.
Bumped off. Isn't that a gangster term?
How come you're talking to us? You should be dead. Clearly the bullets aren't strong enough.
But you're not talking to us from a trunk of a car, are you? Gold.
So I'm seriously, I need something to be a whole lot clearer before I get interested in trade. As I said before, I think Swissy Yen is the most obvious one for me to trade because it just keeps giving. It keeps doing what it's doing, but it's dead set in the middle of the range and of no use to me. So I'm just going to continue to look for market structure. And if I find it, I'll just do exactly the same thing as I always do. Problem is, there's very, very little on offer at the moment.
Yeah.
So I'm going to defer to George. Is George in
George isn't here today, mate.
Oh, wasn't he?
No, he's I think he had a case of COVID.
Yeah, his wife did last week. I hope everything's okay.
Yeah. So he's not in today. So it's just you and I, which is it's like an old classic today, having a bit of a retro. Oh gosh, what's going on here? Yeah, I'll
say that again.
Well, I was trying to get into the room here, but there we go. It's asking me for a code. Never had a code. Never had a code. Somebody asked me for a code before. Let me just see if I can get in now.
Where?
Well, I've got my other PC, which here we go. That's better.
Are you trying to get into this room?
Yeah, trying to get into this room. Yeah, just so I can show you some charts. I'll tell you what. Should we have a quick look at the crypto market, mate?
Go for your life, mate.
Okay, let's have a look because
really, I've got absolutely bugger all.
All right, let's have a look at some crypto charts, and we'll have a look at Bitcoin. Oof, oof. Oh dear me, dear oh dear oh dear.
What's it tanking?
Well, it's just, I mean, you know, it's having the same problem as everything else, where it has come down and now it's paused. Let me just see if I can get onto a better chart here. Can I get onto a better chart? Oh, here we go. Right, let's have a look here, because this is as close to a good chart as I can get. I probably should have got Trading View when they had the little offer. But yeah, so this is the Bitcoin chart right now, mate. Again, in quite a bit of trouble. Regulation looks like it's coming in, and I think the crypto market is you know, as fascinating as ever, really. Where, you know, if you've got it up here where I was getting advised to do, then you're 20 grand down on the price of the coin, 20,000 down on the price of the coin. So it's already dropped 33%. I mean, it's crazy, really.
But that's not unusual, is it?
No, well, no, it's not. But then when you sort of like come up to these kind of zones, all of a sudden this feels like it's really expensive, you know, to buy something for 60 grand, which is more than most luxury cars. Then you're probably you know, quite upset the fact that it's now dropped down to 50 grand. Where does it go to? I don't know. I mean, this is the 30 grand level looks good, doesn't it? When you sort of like look at this chart, that would look like an attractive zone, and I'd be interested in Bitcoin down there. I thought I was going to be interested in around about 50, but I'm not interested in 50 because of what's happened. There's the trend line there that I would look for, that I'd be following. And for that to kind of like play out, it's probably going to be sort of quite some time before this either comes down here and meets the trend line and this low, or it just floods to the downside and we actually get you know, closer to 20. What I find really interesting.
Have you trading crypto? I know you're hodling a few, but are you trading at all?
No, I don't trade crypto, mate. Do you know, one of the reasons that I probably, well, a few reasons I wouldn't trade crypto actually. One of them is because you know, it's still relatively new, and to me, you know, I know other people have been sort of in the game for the first time round, but you know, you and I really got into this thing, you know, about 12 months ago. That was really our kind of well, slightly longer maybe. I mean, I was kind of aware of it 2 years ago, but I didn't really interact with it for another 6 months after that. So I'm only 18 months in to the crypto world.
I never have, and I never will, I don't believe. But
yeah, well, I mean,
I've got other people doing it for me because I can't.
Good, yeah,
I haven't got time.
Yeah, and I understand
to understand it.
What I like is buying something and leaving it, and looking for something else and buying it and leaving it. You know, I'm not really into trading it per se. I mean, it's no doubt that it's making a lot of people a lot of money, but I'm quite comfortable with my system and what I'm trading right now. And do you know what? I was reading this really interesting thing about the brain recently, and it was saying that it's not that we forget things necessarily. It's more that we create new memories and the old ones get replaced. So it's not that we're losing capacity to remember. It's just that we haven't got the capacity to continue to build on, you know, when you're younger, you've got the capacity to build and build and build, but it gets to the point where it plateaus. Yeah, it just plateaus and actually things just get replaced. And I think the problem with diving into a new asset class when another asset class is already working means that you're going to have to replace everything that you've known from the old asset class to get into this one. And by the time you got used to this one, there'll probably be something new. So I don't see the reason really for me to get into trading cryptos. I mean, trading levels, I haven't got a problem with that at all. But understanding what's moving this wild west of a market, I haven't really got any interest in that. I like the FTSE, I like the Nasdaq, I like things that I can understand now. I'm not interested in looking in too deeply. What I like about the crypto market is that it is a disruptor, and I like looking for projects that might disrupt things in the future. And in that way, because it does 10x and 30x and do all that crazy stuff, in that way you can buy something very, put a little bit of money into it and see what happens. And if it takes off, great. If it doesn't, no big deal. You haven't over leveraged yourself. But I'm not really into sort of jumping on board with this stuff. This to me is like GameStop, where it's just too much of a roller coaster. It's not my thing. But I am interested in Bitcoin, and I am interested in buying Bitcoin. I haven't got any Bitcoin. I've got a few other bits, but I haven't got any Bitcoin. But I would like it. But I'm not, again, I don't care if I don't get in here and it goes. I'd like it here. I wouldn't mind it down at 20. But the other thing about this stuff is that when we look at these charts, this down here still has not been tested. Now, I'm not saying that's concerning, but I don't like that.
Yeah, the door is still open.
Yeah, exactly, mate. Exactly. This hasn't been tested. When this happens, oftentimes you'll create the first low and then it'll come down a little bit lower. No, as I say, I don't like that. But then, what you've got here is saying that in the near term, this may well be supported. And if that's the case, then that's absolutely fine as well. But oftentimes,
when did I say this? When was I talking? I can't remember where we were talking. Was it in this show, or we had a staff meeting? This is the same chart as gold.
Yes, you said it in the show, mate. Yeah, absolutely. So we go back to gold. Go back to something that we can trade. Now, don't get me wrong. I'm not saying that Bitcoin's coming down to 15,000 by any stretch, but I'm also not saying it's not coming down there. I'm just saying it's a concern. And yes, you're absolutely right. This hasn't been tested. And for a mature market like gold, it's a bit more concerning in some respects because it often does get tested. So, until that does, it almost creates a bit of a gap here. And that's what I don't like. I mean, you could talk about the same with the NASDAQ. Nothing's been tested on the NASDAQ. This hasn't been tested since Corona. Then we got some tests going up and up and up and up. And, I'm short on the NASDAQ, but it might well come down to this point in the next, you just don't know. What happens, I think, at these levels is that not that it necessarily gets tested, but that because of human nature and because of the way the world works, there will inevitably be some kind of disaster. And when that disaster strikes, then levels get tested. Waiting for that disaster is, it's a ridiculous task. Isn't it, really? Yeah, I mean, you can't really do it because you just don't know it's going to happen. There's so many things that could evade it, and there's so much life that could be led before any kind of disaster does happen. But I think inevitably, human nature creates disasters, and for some reason, we haven't really had anything that, apart from Corona, I suppose, but even that wasn't that significant if you look at the charts. We haven't really had anything that has been known, that has been left to get out of control.
Yeah, since 2008, really. But
exactly.
Even then, if you look at that chart, 2008 meant nothing to the NASDAQ.
Well, this is the 2008 move to the
in the scheme of things. It's a blip, isn't it?
Yeah.
When you look at that chart.
But if you
at the time, it was extremely dramatic. But
absolutely, yeah. But even this, from the lows here, that was tested. That was tested. No, I don't think this one has been. That definitely hasn't been. That was tested. That hasn't been. And now I don't know what's going on now. I mean, it's just crazy. I just don't think charts like this can survive forever. Moves like this just can't survive forever.
No, it can't.
So something's going to give.
Helen, good question. Is gold likely to head to 1,500 before it heads up? Wish I could answer that. That'd be really good if I knew. But remember, we didn't play it. The debate between Jim, what's his name, and that outrageous guy from the States.
Yeah.
Remember that?
Yeah, I do.
And one was saying 1,000 and the other was saying 10,000.
Yes. Yeah.
Now, there you go. I think that says it all. They're both experts in their field.
Yeah.
And one's going that way and the other one's going that way. So
yeah.
Mere mortals, we've got very little hope of predicting that correctly. All we can do is jump on it when and if it gives us the signal that it's going to do that. But that chart just screams at me that it's going short before it's going through that high.
And
that's all I can say.
I suppose this is the point, isn't it, mate? I mean, we have to use technical analysis because the technical analysis is one area that we are on a level playing field. We can look at the chart just the same as everybody else and make a decision. Whereas the fundamental analysts have got so much information at their fingertips that we just aren't a party to unless we're willing to pay 50 grand a year to subscription-based services that give us that information. I mean, these guys know the basic stuff like CPI data, unemployment data. They know about PPIs. They know about PMIs. They know all that stuff. We know about stuff that's reported. But then those guys know how many positions are in the market long, how many positions are in the market short. They'll have teams of people breaking down whether Louisiana is currently in an uptrend in production and Chicago's in a downtrend in production. They've got so much information at their fingertips that they are much better equipped to make fundamental decisions than we are. But when it comes to the technicals, then that's not the case. So we can take a little bit of information and say, well, okay, well, this is what it would appear is going to happen next. And on the face of it, that may be what was the driver. And we can effectively simplify it. But ultimately, if that is to happen, then the price point needs to go from here to here, because if this is in a downtrend, then it's going to reject every time it comes up to resistance. And maybe that resistance is more like there, which we've seen. So if we are technical analysts, then we can say, well, that's the sell zone there. Mm-hmm. If we are technical analysts, we can say, well, there's the buy zone there. Everything in between is going to be something that needs to be looked at on a shorter term time frame, because then you'll be able to find buy and sell zones on shorter term time frames.
And good luck with that with gold.
What's that?
Good luck with the smaller time frames on gold. That's really a tough one to trade on.
Yes, it is. Frames. But this is where we are. I mean, at this point, then I think you start being able to get some clarity. This does look like we're right in the middle of a zone between the highs and the lows, and it also means that this becomes very difficult. Then you can start saying, well, okay, well, what are the shorter term timeframes telling us? And it looks like, if you're looking at that level, that looks relatively clean. So it looks like it's coming down from there. 4 hourly, I don't know, but actually then it just does. Well, there you go. So this now looks like a sell zone on the 4 hourly, and this is where, as I say, as a technician, you can kind of go, well, okay, well, this is okay, because what we can now say is that I'm happy to sell gold here, but if it does this, then I want to be out of my position. So you can sort of you can use the technicals to your advantage, as long as you don't kind of get caught in an area where you're saying, I think it's going down, sell it. Because you've got a hunch that it's going in a certain direction. As Jeff says, that the chart will ultimately tell us what's going to happen and give us probabilities. If it does that, and then it all of a sudden does this, and it holds, then we can say, well, we got a pretty good chance that if it breaks this high, that we're probably going to to the next level up. And then we can ascertain where that will be. And maybe then we can aim for that upper line up there, and that's going to be depend on what your kind of your personality is and everything else. You can take sort of like little bits of profits out, but longer term positions would be looking. I would have thought longer term investors would be looking between these two levels right now, and making a choice on whether they should be getting in long or short from this point and this point. I'm not sure about all this zone in the middle, if I'm honest.
Look, that chart's really telling you a lot. And the only thing I can deduce from that is I've got to see a retrace back to the previous two highs before the breakout high. It's got to retrace back to there and give me a lower high.
To here.
Come down. That nearly you went through it there.
Yeah.
It's got to go back to there before I want to sell it.
Yeah. And I suppose that's the thing, isn't it? That there's, then you can start getting into different levels on the chart and saying, actually, that's really, again, what the technical analysis should do, shouldn't it? It should sort of say, well, where's the safe point? If I'm wrong, then I've still got it relatively cheaply if I sell it here. If I sell it here, I'm going to be sweating all the way up here.
Totally.
Which is why this is why my point with the NASDAQ is why I'm selling the NASDAQ here. Because when I look at this chart, it was expensive here, here, and here. Okay, it did pop through. Now, if this all of a sudden starts to pop through this level, as we see here, it pops through there and gets a close above there, all of a sudden, then I'm going to say, well, I'm probably not right here. And if I see that and it holds, then really the next level should, if we're going through just general logic, should be up there. And then, we'd have to sort of see something else. And okay, that was expensive. I may well want to sell it there as well. But I might have to buy it before I sell it. I don't know. But this is where the decision gets made. You're just sort of like going, okay, well, this held before. Let's give it a go. If it's wrong, it's probably not going to cost me a lot. But if it's right, I'm pretty confident it's going there. And this is effectively all we're trying to do when we're sort of like taking trades. We're saying, well, if I'm wrong, it's going to cost me this, but if I'm right, it's going to cost me multiple that. So it's well worth getting, trying a little position here.
Yeah, that part's good. Setups are the next thing. And I have to trade setups. I don't trade levels, as you know, but that's the hardest part for me at the moment.
Do you know what, mate? Though for me, a level is a setup, because
I know what you're saying.
Because if I sort of like look at this sort of this here as an example, if that area there gets broken, then the likelihood is it becomes resistance, and it does. And I say the same thing if I'm looking at this. If I got a level that's going to break here, the likelihood is that becomes resistance, and it does. And to me, that's all these levels are. They are setups. They're the place that you may well get the best possible price. You might not, because you might sort of end up doing the same thing here. You might go, okay, well that's really a buy sort of like area, and I'll buy it here instead, and then you have to sit through a little bit of it. But that, to me, that's what levels are anyway. I look at levels and I see them as setups, because all other setups are what our understanding needs to have before we take trades.
You know what? That might be my project for 2022. Trade levels.
I think it's well worth it, mate. I think it's well worth it.
Because it is frustrating if you don't get a setup off a level that you like.
Yeah.
And I've struggled with that for quite some time, actually. Not that it bugs me, because there's normally plenty available with my setups. But at the moment, there's just nothing. Absolutely nothing.
Yeah. Everybody has to trade differently. But I think when I look at a chart and I look at clean charts these days, I just see levels and I think, well, why are you to me, I sort of think to myself, why am I creating myself more work having to see this moving average cross that and having to see this cross that? You know, why don't I just get in? Because
it's a valid point.
Yeah,
it's a valid point. Helen, I wouldn't be the least bit concerned about hesitating to buy at those levels. It's a mugs game. What you're seeing is a very, very rare event. Very rare event. The market just does not continue to make higher highs for such a long period of time. And I think you're quite correct to be very hesitant to buy at those levels. And it will change. Okay, you could have made money by buying at the highs. There's absolutely no question about that. But if you intend to stay in the market for years, you will quickly learn that buying at the high is not a fruitful long-term proposition, in my humble opinion.
Oh God, yeah, you're absolutely right. Yeah, the only way you can get away with buying at the high is if you buy at the low first. You know, you can do it the way that the fund managers do it, where they're just building and building and building and building, and then when it eventually drops, it's not a big deal.
That's fine if you're in the position already, yes. But
yeah,
you know, entering a new position at the high is what?
Yeah. Yeah, surest way to the poorhouse. I would have thought it's like betting odds on, isn't it, mate? Eventually, it's going to get you.
It'll get you. Don't worry about that.
Yeah. Okay, mate. Well, I think we can probably call it a wrap.
We're not really giving out too much in terms of let's get in the market, are we?
Well, look, I mean, you guys can see
it's a massive week.
Look at this, though, mate. Look at how quickly these numbers are changing. Sometimes you don't have to look at this over here. You can look at this over here and say, "There's no market.
Yeah.
There is no market. Nobody is doing anything today." So forget it. We need volatility, and there's no volatility today. It will be, it'll come eventually, but today is not a day for trading.
Agreed, 100%. Yet Thursday could well be.
Yes.
And I actually leading into Thursday is probably a better prospect if tomorrow or Wednesday produces something in terms of setups or levels that you can actually trade. I'll be looking if that's not the case, in particular on the euro, but certainly anything against the dollar. If I can see a very tight range in there between now and then being the Fed, I think there's a strong chance that the market will move after the Fed. I've got no idea which way, but that's what the breakout trade's all about. So I think with the ECB, the BOC, and the Fed all on the same day, in the same 24-hour period, we are definitely going to see markets move against the dollar. No idea which way. So if I can get into a trade versus the dollar in particular, and get in a safe position, I think there's a strong chance that we'll make money. And I think if nothing does happen in between now and then, there'll be a strong chance of getting a good breakout on the euro versus the dollar. We shall see. Yeah,
we certainly will. Okay, mate. Well, I guess wait for your traders to do what it needs to do, whether it's a setup you're waiting for or a level, then just wait for it to do what it needs to do. You are welcome, Paul. Yes, mate. May your trades be merry and bright. Yeah, let's hope so. Let's have our own Santa rally going into the end of the year. Thanks as always, guys, for joining us. Great to have you on board, Helen. Come back again. We're here Thursday. We're not in tomorrow, not in Wednesday. Back Thursday for the last show of the year.
The Christmas quiz.
Christmas quiz, yeah. John will be giving us a Christmas quiz, no doubt. So, yeah, join us for the Christmas quiz on Thursday. Thanks as always to you, mate. I've enjoyed it. Been a good day, and I'll see you in a few days. Have a good week.
You bet. You too, mate. Thank you all for being our trading buddies. And Lewis, pissed off. He's trying to bait me into dollar yen. Have fun.
Dollar yen. Oh yeah. No, don't go there,
nemesis.
Lewis. Don't go there.
Have a great week.